That's bad. That's bad. That's bad. Let's zoom in. Is this bad? Let's say that this is scenario 1. Scenario 1 is way worse than scenario 2. And then you had a weaker bounce, then capitulation. You're not going to find this type of analysis anywhere else on all of crypto YouTube or anywhere else on crypto Tweetville. So you're not really going to know if that cross on the weekly is going to be avoided until about April 1st. Weekly 10 EMA and the monthly 10 EMA. That's all you need to determine, is this shit going to be super bearish? Anytime price is below that, every single time in all of Bitcoin history, it's been an excellent time to be buying crypto. If you've made it this far, fucking made it. When you're dealing with price action, you have to accept the fact that you are in a landscape where you simply don't know what's going to happen, ever. Brush off your shoulders, get ready to be a badass, let's do this. Let's zoom in. Is this bad? Yeah, that's bad. My channel and my Twitter has been following that cross on the 5-day chart, but now we have that EMA bearish cross that has gotten things right 100% of times. It's just now happened again and has been confirmed. In this video, I'm going to show you specifically how to navigate smaller term time frames to eyeball that same cross while on smaller time frame charts so you can see the chaos within the weekly candles so that you can determine, will this be the first time that Bitcoin can avoid that catastrophe? Are you ready?
Hit the like button
and subscribe,
or else let's go! This is the same chart putting all the price candles back on for the weekly chart. Let's zoom in, simply see how price managed to navigate across the charts after this cross. Fairly straightforward and simple. It's almost straight down with some choppy. The next bear market was very, very different. You had exceptionally strong bounces until what happened? Until this cross happened. And then you had a weaker bounce, then capitulation. Even though it played out even differently than the previous two on price action, specifically because it just capitulated immediately and then immediately recovered, but regardless, it was still bad. Summary, this cross has played out prior 3 times, now is the 4th, but those 3 times, price behaved differently each time. Using the process of deduction or logic, whatever you want to call it, we have potentially 4 situations that are most likely on a long-term macro scale. A, B, and C, just pick one of those 3 instances. D, or the 4th option, is something new is going to happen. And because all 3 of those were a form of down, the only way that something totally new could technically happen is if it goes up. I'm going to show you specifically what you need to look out for in the event it can go up. And you're going to be able to see the challenges above price on lower time frames so that you can stay super nimble with your feet, and you're not going to find this type of analysis anywhere else on all of crypto YouTube or anywhere else on crypto Tweetville. You won't be able to find it anywhere, I'm telling you. Brush off your shoulders, get ready to be a badass, let's do this. I'm going to go to the 1-hour chart. You're going to need a few things here, and my channel has taught folks over time how to set this up. If you don't know how to set up an EMA, I'll link you to TradingView tutorial at the end of this video. It's very important that you know how to set up a chart. I'm going to throw my origin lines back on, and it's going to be very, very simple to do. Instead of drawing this out 10 years, you simply connect the wick high of February 24th. It hit it exactly, a 10-year-old line. You're going to need this line, and then you connect that to the exact 1-hour wick high of the February 20th, this candle right there. It is the second, or you could pick this one too. It'll be the same line because this candle right here, this is the 1st hour of the 21st, and your chart should say the same thing. But over here around the 20th and 21st, it's the second to highest wicks in that area. You simply connect the wick highs of those areas, but in this area, it's the second wick high, but which is technically, at least in New York time zone, it is the 2 wick highs of that day. But depending on your time zone, you might interpret this as being the wick high. So just know, somewhere around the 20th and 21st, you have a pinnacle. Just take the second highest wick highs and connect that to the ultimate wick high, specifically of February 24th, and you'll have that exact line. These blue lines here are simply parallel to this. You can play around with them yourself and connect them to areas of support and resistance as you see fit. I can zoom out if you want to pause the video, take a snapshot. That's how I have mine set up. So far, so good, pretty easy. The next things you need on your chart to determine, is this going to play out the same way or not. It's a lot easier. That was the hard part. Now this is the easy part. And I'm telling you, once you get this set up, it's going to help you out so much, and you're not going to see this anywhere else on all of the crypto interwebs. And this is, I'm telling you, this is the easiest way to do it. And it's going to be accurate. Sorry for returning viewers, but it's the MTF EMA. For new people, once you pull that up, because you came up to the top here, see where it says indicators? Click that, type in MTF. Once you do it, you need to star it. Make it a star so that in the future, when you type in MTF, it's the first thing. You need to click it twice. 1, 2. Then the indicator will pop up over here. You need to hit the gearbox, go to inputs, and click the monthly 10. You can make it whatever color you want. I would suggest red. Make the opacity all the way up. I'm keeping this a thin line, and you'll see here in a minute why. There it is. Now I can see it up here. See that? But I'm still on the 1 hour chart. You remember I said you clicked it twice because you have 2 of them over here now. Now I'm going to click another one, and I'm going to set up the weekly 10. It's also red. However, I made this 1 week and this number 10. Then I come over here to style, make it red, flip it over, because my EMAs for the 10 on all time frames are red, in order to, so you can make them different colors if you want, if it can keep track of it, but I just know this is my monthly, I know this is my weekly. All right, and if you wanted to get really sexy and fancy with stuff, just to see that cross way up close, you could do something like go back and click MTF EMA one more time and make it the weekly 55 and make it something like blue. And then you can zoom way in here and you can see that they have crossed and it has been confirmed cross. However, I don't think you need the weekly 55 EMA on here because it's already crossed. We already know it did. And it's sandwiched essentially between 2, what I consider more important EMAs anyway. And since they're all at the same place and the monthly 10's on top of it, you really don't need it on your chart. And that's what you need. This is it. I'm going to show you if below this, bad, then the cross is probably going to play out unless it gets back above it. I'm going to show you that cross can be avoided if it gets above these. It's going to be super simple. You can keep this on your dang chart, and at the end of the video, I'll link you to a tutorial so you can save the template, and in one click, it all just pops up right back exactly how you had it. Even if you change time frames, take off the EMAs, it'll all just reappear. If you don't know how to save a template, want to watch the video to which I link you at the end of this video. Turn on your camera and microphone and ask me questions directly in live, straight to my face, up to 8 times a week. Links to the Discord community within the description section of all my videos. Make sure you're following me on Twitter. What the heck are you doing if you're not? 𝘾𝑗𝐻𝑚2, 𝘾𝑗𝐻𝑚 with the number 2 for frequent Bitcoin and cryptocurrency updates. And if online communities are not your thing because you simply do not have the time to commit, but you want exclusive content above and beyond what I offer on YouTube, click the join button. That's right below this dang video. Another video will pop up describing your options to you. So again, now we have our origin line. We have the 1 hour 200 EMA, the weekly 10 EMA, and the monthly 10 EMA. That's all you need to determine, is this shit gonna be super bearish? That's it. That's literally all you need right now. Because if price can't get back above this and stay back above it, general terms, so as step 1 for the bullish case, if it's gonna undo it, it's gonna fly down. That's simply how it works. This is the most important line in all of Bitcoin history. Below it, bad. You zoom way out on the chart. It's also historically an amazing time to be in crypto, to start buying crypto. Is it always the best exact time? No, because sometimes when Bitcoin's under here, altcoins can drop another 50%. However, if you zoom out, you realize anything, so those blue lines are the same blue lines we were seeing earlier. Anytime price is below that, every single time in all of Bitcoin history, it's been an excellent time to be buying crypto. I'm not a financial advisor. I'm not giving you financial advice because something different could happen to a bearish side as well. It could go down, 2 origin lines down. This might be a mediocre time to buy, but historically, as of now, I think it is a factual statement that with time, it's been an excellent time to buy on spot trade, not with leverage necessarily. Leverage, you can still get destroyed. Over accumulating crypto in general, and potentially just taking them off exchanges for the next bull run that might be in 2 years, it's historically like it's the perfect time to get crypto. Okay, so that's also some good news, as bearish as shit has been. So hopefully this makes you feel better if you're still in crypto right now. If you've made it this far, you fucking made it. In general terms, if price can stay above this orange line, the 1 hour 200 EMA, it's going to be good. And it will likely, this orange line will likely squeeze price out like a soap bar above this gray line or the master origin line. If price can get over that point, it's not over. That is only like the first hurdle among another 1,000. Getting above this section right here, the monthly 10 and the weekly 10, is going to be a lot harder. And when Bitcoin price does get above there, it could end up simply being a wick above. However, if it does get above, it's better than if it didn't, but it's still not out of the woods yet. So step 1 is get above the origin line and use it as support. Price simply zooms above it straight up to here. Honestly, I don't think that's good. It needs to use it as support like this. That's step 1. This is not step 1. Hopefully I'm being extraordinarily clear with that. Step 1 is this stuff down here. And honestly, let's say that this is scenario 1. Scenario 1 is way worse than scenario 2. Scenario 2 right here, that's way more bullish than scenario 1. Even though a lot of people start longing, but they're going to get destroyed if that happens. That's step 1. Step 2 is you need to get above the monthly 10. But you have an obstacle even before that. However, since they're so close together, step 2 is get above the monthly 10. And because we're on the lower time frames, we can see how price will interact with it. Okay, that's step 2. But Tim, we should be home free after that. Actually, no, you're not. Step 3 is you need a freaking monthly closure, which our next month coming up is going to be March. March has to close the candle above that. So you're not really going to know if that cross on the weekly is going to be avoided. In terms of not repeating history, which has a 100% hit rate so far, you're not going to know until about April 1st. So all of month, the whole month of March, even if it gets above that top red line, you're simply not going to know if it's going to be able to be sustained until April's candle begins, and it begins above that red line. Therefore, step 3 has a time factor along with it. Step 1 and 2 do not. Step 1 and 2 can just happen whenever, but step 3 is specifically tied to the monthly open of April and the monthly close, which happens instantaneously, right? Monthly close. Let's go to the monthly chart now. And now I'm going to throw on another EMA fill here, and you can see that I have on the 10 and the 55. If the month of March, I'm going to take off my origin lines for this. If the month of March can close above this line, there is a strong chance that that cross will be avoided. However, it's still not 100%, but I would say that you definitely have an edge on that cross not playing out for the first time ever. For example, the reasons why it's not 100% is that price went into the channel, had a strong rally, went back into the channel, had a fake out closure. This month right here, the month of July 18th, is the only time in Bitcoin history where you had this fake out, but it has happened, and then it's still tanked. Therefore, even though this is the exact signature that I'm looking for, and in this case, because Bitcoin has done the same thing, it's come to the channel, big rally, and went back in. Let's go to current price to see that same thing. May and June and July, it went into the channel, had a big rally, came back into it. It is possible that as it comes and closes above, it's a fake out, but I still believe that would be your edge on being more macro bullish for the long term, weekly and monthly scales. But Tim, why are you going back and forth on this? Well, I'm not really. I'm simply letting you know it's not going to be 100% hit rate. It's not going to be foolproof necessarily, but the only thing in trading, so when you're dealing with price action, you have to accept the fact that you are in a landscape where you simply don't know what's going to happen, ever. The only thing you can know is when you have a probability shift in your favor, or a probability shift even if it's not in your favor. If you want to be bearish and you want to go short and you see a probabilistic shift to the bullishness that's not in your favor, but you know to stop being bearish and be likely more bullish. It tells you how to move with the market and how to change and evolve with it, because you can't control the market. The market is smarter than you and me put together. I'm telling you, it is. It is savage, it's brutal, it's unpredictable. More importantly, it is simply a landscape in which you don't know, and it's forever like that. Therefore, the only thing you can do is know when probabilities shift this way or that way. That's all you can do, and I'm trying to show you that. That exact signal would give a probability shift to the upside. I thought I would show you one instance where it did not actually work, so that you know it's not foolproof and you don't just go all in and then get destroyed in the event that it doesn't play out. If price cannot get step 1, 2, and 3, then historically, price wicks below the blue line every single time also. Every single time. And all these big down moves that wick below, what does it have in common? The beginning of the video, which I showed you that cross with the alarm bells. And if price cannot get step 1, 2, and 3 under its belt, then price is extremely likely to come around here, which is going to be somewhere between 18 and 21K, depending on what month, because this is slowly rising. And the beauty of this is now that we know exactly what to look out for on the lower time frames now, we can essentially be masters of the charts right now. We have the origin line, we have the weekly 10 and monthly 10, and we know exactly what steps need to happen in order for that weekly cross to be avoided. And we can dissect it very easily by being on a smaller time frame chart, like the 1 hour, 4 hour, whatever time frame you like the most. Something that I pulled up on Twitter and posted is something to look out for to try to better determine if price can get above the weekly 10 and monthly 10, something that should associate directly with it. Another easier way to look at it, this green line down here will get above and stay above white moving average line, which is the moving average of the RSI itself. But if price starts creeping up there, you can bet your bottom dollar that I'll be staring at that 5-day RSI chart, and I'll be posting about it on Twitter, because it's going to work directly in conjunction. It'll add one layer of the cake of confirmation. Leave me a comment down below to let me know if you think this was helpful. I honestly want to know your feedback. This playlist right here, if you want to learn how to set up a chart just like mine and or learn basic buying and selling strategies if you're new to crypto, click this playlist right here if you're more intermediate in crypto and you want to understand a little bit better how and why price moves the way it does. Click the circle in the middle if you're new to my channel and you just got 𝐾𝐢𝐬𝐜𝐸 worldwide. Peace.